Our T-Mobile bill is out of control. I don't care what Deadpool says about it. But what if you could flip that? What if you could make T-Mobile and other dividend stocks pay you $1,000 a month? How many shares of stocks do you need to buy? Or how much do you need to invest to make that $1,000 a month in cash flow you can count on? Let's get started with everyone's favorite monthly dividend stock, Realty Income, ticker O, with its 5.2% dividend. And I know I led with T-Mobile, but it only pays a measly 1.3% dividend yield. You will never get $1,000 a month from that unless you're ready to invest $876,000. Instead, I'll highlight the 5 best dividend stocks with yields over 5%, the ones anyone can build to that $1,000 a month. Stick around and I'll highlight where to find the highest paying dividend stocks and exactly how much to invest in each. Realty Income is the 7th largest REIT with 335 million square feet and over 1,500 tenants. Its popularity comes from that track record of 29 consecutive years in dividend increases with cash paid out every month. The company has recently started diversifying its property and tenant base, buying into casino and leisure with Wynn Resorts and into data centers. But 73% of total rent is still from that brick and mortar retail, mostly in groceries, convenience, dollar stores, and pharmacy. That used to be a point of strength, the kind of retail properties that weren't subject to the e-commerce trend, but a lot of these, particularly those dollar stores and pharmacy, have been struggling pretty bad lately, and shares are down 24% over the past 5 years. Still, Realty Income has been able to continue growing that dividend by 3.6% a year, and with the dividend, has been able to eke out an 8% total return over the period. Shares are cheap here at just 12 times funds from operations, but recent earnings from major tenants like Walgreens and Dollar General point to massive store closings, so while this one will keep paying the dividend, you're not going to see much more than that 5% cash flow. I wanted to highlight it here because I know a lot of investors follow this one, but at a 5.2% rate, you'll need over 3,800 shares and $230,000 invested to book that $1,000 a month income. I'm going to show you how to find that number and compare it with all the stocks later, including one that pays a 12% dividend yield. We're just getting started, but first I'm relaunching our custom portfolio tracker with a 33% discount, only with the link below in the description. This is so much more than just a stock portfolio tracker where you put in your stocks. You can put in 2 stocks to compare them side by side as well as against sector averages in 10 critical measures for stock analysis. The spreadsheet downloads all this data directly from the internet, so you get up-to-date information. Here in the Investing Goals tab, you can put in your age, years until you want to retire, and how much you invest each month. The spreadsheet is going to use your current portfolio, past returns, and how you invest to estimate exactly how much you'll have when retirement comes around. It's also going to help you find out how much you need to live well. This is a complete stock portfolio and financial goals spreadsheet. And again, I'm relaunching it with a 33% discount. You're going to get lifetime access to any updates, videos on how to use it, and how to reach your goals. I'll leave a link below in the description to that special relaunch discount, so check that out. A higher 7.2% dividend yield and one of the most popular energy stocks for investors is Enterprise Products Partners, ticker EPD. EPD is a fully integrated midstream company, meaning it has exposure to everything between the explorers and the retailers, including 50,000 miles of pipeline, storage, gas processing, and chemicals. It's more diversified than most midstream energy companies and has the financial weight to leverage its size for those higher returns. Return on invested capital has remained above 13% even in the worst collapse in oil prices, so you've got a dividend stock you do not have to worry about. Now, dividend growth hasn't set the world on fire here at just 3.5% a year over the last 5, but the shares have produced an 8.5% annualized return. Now, the company just made the list of dividend champions with a 25th consecutive year of dividend increases, and is going to be one to own for a long time. On that 7.2% dividend yield, you would still need just over 5,800 shares of EPD to receive that $1,000 cash flow each month. That's that 52.5 cents dividend every 3 months on 5,805 shares, which would be a $166,667 investment. As a tobacco company, Altria Group, ticker MO, may not be on everyone's list, but it's hard to ignore with a 7.8% dividend and 53 years of consecutive increases. The owner of the Marlboro brand in the United States is facing rates of double-digit declines in cigarette volumes, but is aggressively taking market share in smoke-free segments to make up that difference, seeing a 20% increase in its Enjoy product volumes just in the last year. Strength in its brands and marketing has also helped it grab a full % market share in cigarettes over the last year, cushioning that decline in volume. Altria also owns a 10% stake in beer maker Anheuser-Busch, worth $10 billion for some serious cash flow. All this has helped the company keep revenue flat and drive a 3.7% pace of earnings growth on profitability. That's helped it grow the dividend by 3.1% a year over the last 5 and has increased its payout for 53 consecutive years, making it a dividend king. And this is actually usually a higher yielding stock, an 8% plus dividend, but a recent jump in the share price has brought it down to that 7.8%. That means you'd need about 3,062 shares or an investment of $154,000 to create that $1,000 a month cash flow. This stock has almost doubled in the last 5 years though, producing an 85% total return. So if you can keep up that pace, you could invest a lot less and just let time do the work. We've still got 2 more dividend stocks for that $1,000 cash flow, 2 with yields above 9% to make it even easier to reach that monthly income. But I can't just drop a list of stocks in your lap and say, go buy these. I want to show you where to find these highest yielding dividend stocks and the ones that will pay you every month. For the highest and most dependable dividends, the first place you want to look is in REITs, or real estate investment trusts, then in BDCs, or business development corporations. Now, these are special types of companies that pay no corporate taxes as long as they pass through their profits to investors. That is the most tax-efficient business structure, and you get the highest dividends possible. One of the best resources for finding real estate stocks is the National Association of REITs, or NAREIT. We can go here to REIT data in the main menu, click that market data, and then scroll down to REIT Watch monthly publication. Here you're going to find lots of charts, analysis, and data, but if we scroll all the way to the bottom, we find all the REIT stocks separated by property type, along with ticker symbol and data. Each stock shows analysis on funds from operations, growth, and that dividend yield. Another way to find real estate stocks, or an easy investment in all of them, is to start with the Vanguard Real Estate Index Fund, the VNQ, which pays a 4% dividend yield, more than twice the dividend you get from the overall market. You can also go here to Holdings, scroll down, and you're going to find the REITs within the fund, giving you a place to start to find other REIT stocks. One resource I use to find BDCs and analysis is the Raymond James Weekly BDC Insights Report, published free every week. This one isn't as easily laid out, but you will find every BDC by important data points, including base dividend, total yield, and the average portfolio yield. The report also ranks each BDC for each metric to help you find the very best. The VanEck BDC Income ETF, ticker BIZD, pays a 10.9% yield and invests across dozens of BDCs for that one-stop investment. Or again, you can go here to the holdings and check out the individual names to pick out the best dividend payers. I wanted to include at least one ETF on the list, and my favorite right now is the JP Morgan Equity Premium Income, the JEPQ, with its 9.2% dividend yield and growth from the NASDAQ 100. This is similar to the QYLD with that focus on the NASDAQ 100 index, but with the expertise of JP Morgan managers we see in the JEPI. This one has produced a 20% annualized return over the fund's 2-year life. The JEPQ holds those stocks in the NASDAQ 100 index, the tech-heavy group of stocks, and then sells call options against them to create that income. That focus on tech stocks in the JEPQ, rather than defensive names in the JEPI, should help it outperform on returns in bull markets, though it will likely fall harder in a recession. That's why I still like the JEPI as well as a safer investment and still with a solid 7.2% dividend, but also just can't ignore the higher yield on the JEPQ. That 9.2% yield starts making it a lot easier to reach that $1,000 monthly cash flow, and this one is paid out on a monthly basis, so you don't have to wait and then split up your quarterly payments. On that yield, you'll still need about 2,554 shares of the JEPQ, or an investment of $131,000 for that cash flow, so don't miss our next stock here. Our next dividend stock pays a 12% yield, the highest on the list, but only pays it every 3 months. Building to that $1,000 a month cash flow is a lot easier though when you get your dividends every single month. So check out this video next, the highest paying monthly dividend stocks to buy right now. I recently highlighted Arbor Realty Trust, ticker ABR, as a short squeeze candidate, and the 12.7% dividend puts it at top of our list for cash flow as well. ABR is a mortgage REIT. It borrows on short-term rates and then uses that money to buy mortgage loans as an investment, mostly multifamily apartment mortgages. The problem is, multifamily investors took out floating rate loans when mortgage rates were around 4%, but as those loans start to reset with rates closer to 8%, short sellers are betting that default rates increase and ABR has to write down the value of those loans. According to Green Street, multifamily apartment values are down 26% over the last 2 years, and shares of another MREIT, Blackstone Mortgage Trust, have plunged 23% this year. Our shares of ABR are holding up better though, down just 11% in 2024 and about flat over the last year. ABR has been more aggressive at modifying its loans, letting borrowers extend and avoid that default. This kind of extend and pretend is going on everywhere in real estate loans and banking, and short sellers are betting that it can't go on forever. The deciding factor in all of this will be interest rates. Data over the last couple of months shows the economy and inflation slowing, and if the Fed starts cutting rates, it will prop up that real estate market and could be the catalyst that drives a short squeeze in ABR. The company reaffirmed its dividend recently, and that 12.7% yield means you only need $94,265 invested in the shares, or about 7,000 shares of the stock, for that $1,000 a month cash flow. Here's how many shares of each of those stocks you would need to produce that $1,000 monthly income. And don't get freaked out here, because I'm going to show you a hack to increase your monthly income later. How I found these: you take that $1,000 monthly income and multiply by 12 for that yearly amount. Then you divide that by the dividend yield, which gives you how much you need to invest in the stock, and divide that by the share price, gives you the number of shares to buy. So you see, the number of shares you need depends not only on that dividend yield, what percentage cash return you get on each share, but also on the share price. That's why you need so many more shares of Arbor Realty at $13 each, even though it offers the highest dividend yield. Of course, these share amounts don't mean as much as the actual amount you need to invest. So you can take a step back and use that same idea to get the amount you need to invest in each stock to produce that $1,000 income. Here you see, it's all about that dividend yield. With the smaller 5.2% yield on shares of realty income, you'd need over $230,000 invested to generate the income. But getting paid nearly 13% on shares of ABR means you need less than half that amount to earn the same dividend cash flow. But even that amount, $230,000 in shares of realty income or $94,000 in shares of Arbor, is still way out of reach for a lot of investors. How do you earn $1,000 a month income and not have to be a millionaire? The answer is, you can't just look at the dividends. This table shows the total return for each stock as well as the dividend yield, so that cash yield in the third column, but then how much you make with the price return and the dividend as well over the last 5 years in the fifth column. I've included how much you would need to invest if you wanted to make that $1,000 income just off the dividends, the sixth column here, showing that $94,000 in Arbor or $230,000 in realty income, but then also the amount to invest if you use that total return. Then it makes all the difference. Now notice that some of these produced a total return that is less than the dividend yield. That's common in these high-yield stocks, paying out most of their earnings as dividends, so your dividend yield is generally going to be as good as it gets for stocks like Arbor, and even here for realty income. But look at that JP Morgan ETF, the JEPQ, with a return of nearly 16% since inception. Instead of having to invest $142,000, you would only need to invest $77,000 to be able to take out that $1,000 a month. With that 13% annual return on Altria, you could have generated $1,000 a month off less than $100,000 invested, less than 2/3 what you would have needed just relying on the dividends. And I know a lot of you out there are saying, yeah, but I don't want to sell stock to make that income, but it really makes no difference when you think about it. If you take that dividend instead of reinvesting it, you're taking some of the money that could have been used to grow your portfolio, and your portfolio amount stays the same. Well, if you're only selling your returns, then your portfolio amount is going to stay pretty much the same in that scenario as well. And this is a way of looking at stocks. Harvesting those returns as well as the dividends is going to open up that income that would otherwise be out of reach for a lot of investors. Get that special community discount, save 33%, and track all your stocks in one place with our goals and tracker spreadsheet and the link in the description below. Or click on the video to the right for the highest paying monthly dividend stocks to get to that $1,000 a month dividends even faster. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.